Good day everyone. This video is all about tax remedies for both government and the taxpayers. Each tax remedy will be discussed by the members of the group. The group as well provides related cases that fit for each tax remedy. Without further ado, let's begin.
Tax remedies are legal procedures that can be used to achieve the remedy that you desire either from the taxpayer side or the government's. Because our government relies on self-assessment to calculate taxes, there are risks associated with this method. It could be due to non-compliance on the part of the taxpayer or fraudulent filing of tax returns. But it could also be due to the government overstating the tax liability. For this report, I will be discussing the tax remedies available to the government. Basically, the government has two remedies, assessment and collection, that can also lead to other proceedings like civil action or criminal suit. Assessment is a determination by the BIR that the taxpayer has not paid the correct amount of taxes due to the government. An assessment could also refer to a notice that the government sends to a taxpayer informing them of their tax liability and the obligation to pay it. So how does it work? First, when a letter of authority is issued, a BIR revenue officer will investigate the taxpayer's accounts and other records in order to determine his or her correct tax liability. There will also be a letter notice to communicate to the taxpayer his discrepancies reported in his tax return along with the letter of authority. If the taxpayer accepts the notice and the findings of discrepancy, he or she has 30 days from the date of receipt of the letter notice to satisfy the tax liability. If the taxpayer did not act upon the first scenario and the revenue officer finishes his investigation and it found out that there is deficiency tax, a preliminary assessment notice or PAN will be sent to the taxpayer informing his obligation to pay, within which he has 15 days to comply. If he complies within 15 days, agrees with the PAN, and pays the tax, no more action is required, and the BIR will send him a termination letter or closure letter indicating that his tax liabilities are fully satisfied. However, if his reply to the PAN does not contain any merit, within 15 days, a formal letter of demand or FLD and final assessment notice or FAN will be issued to him, which will serve as a final statement or notice that he is obligated to pay the deficiency tax due. His options are to pay the tax due or protest the assessment, which will be discussed in detail on the taxpayer side of remedies. If by any chance he does not pay or protest the assessment within 30 days upon release thereof, the assessment will become final, executory, and demandable, which will then result to the government to proceed in collection. The last part of the flowchart is when and if the taxpayer protests the assessment. He can either plea for a request for reconsideration or plea for a request for reinvestigation, which are to be discussed more on the taxpayer's remedies. A related case regarding to the validity of an assessment will be discussed by my groupmate.
The case related to this will be the Commissioner of Internal Revenue, which is the petitioner, versus T Shuttle Service Incorporated, which is the respondent. The relevant facts are as follows. July 15, 2009, the Commissioner of Internal Revenue issued a letter of notice informing that the discrepancies found after comparing its tax returns for calendar year 2007. Bureau of Internal Revenue issued a follow-up letter dated on August 24, 2009. January 12, 2010, due to the inaction of the respondent, Commissioner of Internal Revenue issued a letter of authority, which is the first part of the assessment process, as what Mr. Pisao said, for the examination of its book of accounts and other accounting records, and followed by a notice of informal conference. March 29, 2010, Commissioner of Internal Revenue issued a preliminary assessment notice with attached details of discrepancies that found respondent liable for deficiency, income tax, and value-added tax in the total amount of 6,485,579 and 49 cents. Then on July 20, 2010, the Commissioner of Internal Revenue issued a final assessment notice assessing respondent with the deficiency of value-added tax in the amount of 3,720,488 and 73 cents, and deficiency income tax in the amount of 5,305,486 and 50 cents. November 28, 2012. The Revenue District Officer issued a preliminary collection of letter requesting respondents to pay the assessed tax liability within 10 days from notice. But because there was no response received, the Revenue District Officer issued a final notice before seizures on January 23, 2013, giving respondent the last opportunity to settle its tax liability within 10 days from notice. On March 20, 2013, respondent sent a letter to the Revenue District Officer and the Collection Officer stating that they are not aware of any pending liability for calendar year 2007 and they have not received the notices but because they have claimed that Mr. B. Benitez, an employee who is unauthorized to receive these notices, have not forwarded it to them. Respondent also requested a grace period of 1 month to review its documents, which was denied by the Revenue District Officer on April 2, 2013 in a form of letter. April 19, 2013, respondent protested the final notice before seizure, claimed that they are not liable for any deficiency income tax for calendar year 2007, that being a common carrier, it is exempt from the payment of value-added tax, that the service of the NIC was invalid, and that it did not receive the preliminary assessment notice and final assessment notice prior to the issuance of the FNBS. However, on April 23, 2013, respondent was constructively served with a warrant of distraint and or levy, which is to enforce that the collection of unpaid taxes. May 2, 2013, respondent filed a petition for review with the Court of Tax Appeals and Division, which was then granted on August 30, 2016, that cancelled and set aside the final assessment notice, including the attached assessment notices for deficiency income tax and value-added tax, and the warrant of distraint and or levy. The Court of Tax Appeals Division found that the respondent was not accorded due process in the issuance of preliminary assessment notice and final assessment notice, as there was a failure to prove that the notices were properly and duly served upon and received by the respondent. Hence, it is declared void that the assessments made against respondent for deficiency income tax and deficiency value-added tax number 17. In the resolution dated on November 16, 2016, the Court of Tax Appeal Division denied the Commissioner of Internal Revenue's motion for reconsideration. Hence, that the Commissioner of Internal Revenue filed a petition for a review with the Court of Tax Appeal in bank, which was denied on April 3, 2018 for lack of merit. The issues and ruling for this case are as follows. The first issue is whether the Court of Tax Appeals erred in finding the assessments null and void due to the CIR's failure or the Commissioner of Internal Revenue's failure due to verify service on the respondent. The second issue is whether the Court of Tax Appeals erred in ruling the final assessment notice null and void for failing to provide a specific due date for the payment of tax liabilities. The ruling for the first issue will be: number, the Supreme Court ruled that the factual matters such as whether the Commissioner of Internal Revenue adequately proved that the preliminary assessment notice and final assessment notice were properly served and received by the respondent are not suitable subjects of certiorari appeal. When the petition for review by Commissioner of Internal Revenue was denied, the Court of Tax Appeal Division affirmed that the Commissioner of Internal Revenue failed to prove that the preliminary assessment notice and final assessment notice were properly and duly served upon and received by the respondent. Consequently, it declared void the deficiency income tax and value-added tax for calendar year 2007 assessed against respondent for failure to accord respondent due to process in their issuance. It stated that the preliminary assessment notice or final assessment notice may be served on taxpayer via registered mail. And according to the Rules of Court, Section 3, Rule 131, a letter lawfully directed and mailed was received in the usual course of mail. The Commissioner of Internal Revenue must now prove that the assessment notices were properly mailed and served by the respondent or its authorized representative. In this case, the Commissioner of Internal Revenue failed to identify and authenticate the signatures appearing on the registry's receipts given. The ruling for second issue will be: number, the court did not address whether the subject assessments contained a specific time limit for paying the assessed taxes. As this is a factual issue, the court accepts the latter's finding that the final assessment notice and related assessment letters did not carry a specific payment deadline. The Court of Tax Appeal and Bank ruled that the deficiency income tax and value-added tax assessments against respondent for calendar year 2007 are still void for failure to demand payment of the taxes due within a specific period. It observed that the final assessment notice and assessment notices attached to it failed to prescribe a definite period for respondent to pay the alleged deficiency taxes.
After knowing how assessment works, let's proceed to collection. Collection refers to the government process of enforcing the payment of taxes. It is enforced once the assessment has reached its finality and has become executory and demandable. This is when either the taxpayer fails to respond to the PAN or fails to protest the FLD or FAN, or if the protest is denied by the Commissioner of Internal Revenue or his authorized representative. Once the assessment has reached finality, the taxpayer is sent a preliminary collection letter which allows him to settle his tax liabilities with charges while avoiding the possibility of having his properties confiscated or forfeited by the government. He can pay this by lump sum, installments, or compromise payment. The Bureau of Internal Revenue must, however, approve installment payments and compromise agreements. Within 10 days from the issuance of the preliminary collection letter, the BIR will then send the taxpayer the final notice before seizure letter, which will inform the taxpayer that his properties will be used to satisfy his tax liabilities. The remedies are distraint, levy, or garnishment depending on the property. Distraint is the government seizing the taxpayer's tangible or intangible personal property to compel tax payment. Levy is the seizure of the taxpayer's real property in order to ensure that the tax is paid. Garnishment is the seizure or distraint of the taxpayer's property, such as bank accounts or credits. Afterwards, a warrant of distraint or levy, or WDL, is given to the taxpayer, which allows the revenue officer to look at or research the taxpayer's properties that can be used in order to pay his tax liabilities. A notice of tax lien or notice of levy will subsequently be issued, validating the government's legal claims or charges against the taxpayer's property, whether personal or real, to secure payment of his tax due. Within 20 days of getting a warrant for distraint or levy, the officer in charge of the proceedings will advertise the property up for auction for 30 days. This is where the remedies for the government comes in, which are either the taxpayer will settle his tax liabilities and charges, which in effect, the BIR will return the properties identified to the taxpayer, or once the properties are put up for auction and sold to the highest bidder, The sale proceeds are used to pay off the taxpayer's liabilities. If there is excess, the taxpayer will receive it. Or, if by any chance, if there isn't enough of a bid price, when bidders in 2 consecutive auctions don't raise enough money to cover the taxpayer's liability, the government will forfeit the property, which is now owned by the Republic of the Philippines. However, the taxpayer still has the right of redemption, which is 1 year from the date of the auction sale or forfeiture to get back the property that was sold or forfeited.
Bongbong Marcos asked the Court of Appeals to overturn the Court of Appeals decision to approve the CIR's petition to tax the late president's possession. Marcos to repay the cost of his tax debts when he was in exile in the United States. According to Marcos, the properties can't be levied to pay the taxes since they're still in probate. This means they can't be sold to pay the taxes until the probate court issues an order or the probate procedure is completed. The BIR's notices of levy on the properties were also issued beyond the authorized period, making them null and illegal, according to the petitioner. The CIR is being questioned for levying on real property to acquire money from the late president's estate and properties, despite the fact that there is still a lot of work to be done on the probate of his will. In this case, that the government's deficient income tax assessments and estate tax assessments are already final and unappealable, and the government's subsequent levy of real properties is a tax remedy sanctioned by sections 213 and 218 of the National Internal Revenue Code. This summary tax remedy is different and distinct from the other tax remedies, such as judicial civil actions and criminal actions, and it is unaffected or excluded by the government's other tax remedies. The failure to file an estate tax return, as well as the failure to contest or appeal the BIR's assessment, is fatal to the petitioner's case, because under the aforementioned provision, the tax may be assessed at any time within 10 years of the emission, and any tax to assess may be collected by levy on real property within 3 years of the assessment of the tax. There is no reason why BIR cannot continue to collect the estate tax now that the assessment has become final and unappealable due to the petitioner's failure to challenge the legality of the assessment. Any challenge to the assessment should have followed the path laid forth in Section 229 of the NIRC, which governs objections against assessments of internal revenue taxes.
Since we're done with the tax remedies of the government, now let's proceed to the tax remedies of the taxpayer. Tax remedies of the taxpayer consist of 2, which are disputing an assessment and recovery of erroneously paid taxes. So let's discuss first the disputing an assessment, which is the tax remedies of the taxpayer if the tax has not yet paid the assessment.
Hello everyone, I'm Miss Lawas and together with me is Miss Pasaje, and we are here to discuss one of the available remedies on the part of the taxpayer. Since the taxpayer may be improperly assessed, he has an option or legal action that he can avail, and one of them is disputing an assessment that can only be executed if the tax has not yet paid the assessment. So the flowcharts that we are going to show on the screen are the detailed breakdown in disputing an assessment. So the first step in disputing an assessment is when the taxpayer receives the pre-assessment notice. So he is given up to 15 days to reply or explain his position in the proposed assessment, such that the content of taxpayer's reply to the pre-assessment notice shall include: first, explanation and matters questioned by the examiner; factual and legal basis supporting the taxpayer's position; lastly, taxpayer for full or partial cancellation of the pre-assessment notice. So after receiving the pre-assessment notice, in the second step, it is important to note that the formal letter of demand or final assessment notice is issued when the taxpayer either failed to respond to the pre-assessment notice within 15 days of its receipt, or the reply to the pre-assessment notice was found to be without merit. And upon the receipt of the formal letter of demand or final assessment notice, the taxpayer must file a written formal protest to the Commissioner of Internal Revenue or his authorized representative within 30 days. And there are two types of protests that can be filed, and these are requests for reconsideration when no new issues or evidence to be raised, or the request for reinvestigation when new issues or evidence will be raised. So kindly continue, Ms. Pasaje.
Good evening, sir and classmates. So the third step is the time when the taxpayer chooses either the request for investigation or reconsideration. In case of a request for investigation, the taxpayer is mandatorily required to submit relevant supporting documents within 60 days from the date of filing of the protest. Then, another period of not less than 6 months or 180 days to give way to their investigation and then wait for the BIR action. On the other hand, in case of a request for consideration, the taxpayer must wait for the BIR action within 180 days from the receipt of formal letter of demand or final assessment notice. In the fourth step, the request can be denied, and there are two ways to deny the protest of the taxpayer, and these are direct and indirect denial. In case of direct denial, the taxpayer must file an appeal with the Court of Tax Appeals Division within 30 days from the receipt of the formal letter of denial. On the other hand, it is indirect denial when the protest is not acted upon by the Commissioner's duly authorized representative within 180 days counted from the date of filing of the protest in case of a request for consideration, or within 180 days from the date of submission by the taxpayer of the required documents, and also 60 days from the filing of the protest in case of a request for investigation. And the taxpayer may either A. File an appeal to the Court of Tax Appeals Division within 30 days from the lapse of the 180-day period in which the taxpayer assumed that the protest is impliedly denied, or await for the final decision of the CIR or his duly authorized representative, in which he cannot proceed to the Court of Tax Appeals Division until the CIR denies his appeal, and then appeal such final decision to the Court of Tax Appeals Division within 30 days after the receipt of a copy of such decision. And kindly continue, Ms. Lawas.
So, in the fifth step, if the Court of Tax Appeals Division deny the appeal, the taxpayer may file a motion for reconsideration before the same Court of Tax Appeals Division within 15 days from the receipt of such decision. Then, if motion for reconsideration is denied, the taxpayer may file an appeal with the Court of Tax Appeals en banc within 15 days from the receipt of such decision. So the difference between division and en banc is that en banc is a group of all judges rather than selected panel of judges, while division consists of selected panel of judges. So the taxpayer should proceed in the sixth step if the appeal to the Court of Tax Appeals en banc was denied again. So the taxpayer still had an option to file a motion for reconsideration before the same Court of Tax Appeals en banc within 15 days from the receipt of such decision. Then, if motion for reconsideration is denied, the taxpayer may file an appeal with the Supreme Court Division within 15 days from the receipt of such decision. So kindly continue, Ms. Pasaje.
In the seventh step, if the Supreme Court Division denied the appeal, the taxpayer may file a motion for reconsideration before the same Supreme Court Division within 15 days from the receipt of such decision. Then, if motion for reconsideration is denied, the taxpayer may file an appeal with the Supreme Court en banc within 15 days from the receipt of such decision. Lastly,
If the appeal to the Supreme Court en banc was denied, the taxpayer may file a motion for reconsideration before the same Supreme Court en banc within 15 days from the receipt of such decision. Lastly, if the appeal to the Supreme Court en banc was denied, the taxpayer may file a motion for reconsideration before the same Supreme Court en banc within 15 days from the receipt of such decision. Then, if motion for reconsideration is still denied, then the taxpayer has no more remedy and the assessment shall become final, executory, and demandable. And kindly note that from the issuance of the formal letter of demand or final assessment notice, all the periods in availing the remedies are mandatory, in which failure to comply shall result in the assessment being final, executory, and demandable. In other words, the decision can become final and executory if the taxpayer already exhausted all remedies or fails to comply one of the requirements in the remedies. Kindly note that from the issuance of the formal letter of demand or final assessment notice, all the periods in availing the remedies are mandatory, in which failure to comply shall result in the assessment being final, executory, and demandable. In other words, the decision can become final and executory if the taxpayer already exhausted all remedies or fails to comply one of the requirements in the remedies. And kindly continue, Ms. Lawas.
So, this is the summary of all the remedies that the taxpayer can avail when disputing an assessment. From the issuance of pre-assessment notice, and then if the taxpayer fails to respond to the pre-assessment notice, or reply was found to be without merit, the taxpayer may receive the formal letter of demand or final assessment notice. Upon receiving it, the taxpayer may exhaust all the remedies if the protest or the appeal will be denied on the next division or en banc until such time that the assessment shall become final, executory, and demandable, after exhausting all of the available remedies or when the taxpayer fails to comply on the requirements. The related case in disputing an assessment is the case of Allied Banking Corporation versus the Commissioner of Internal Revenue, which is GR number 175097, dated February 5, 2010. So facts. On April 30, 2004, the BIR issued a preliminary assessment notice to petitioner, which is the Allied Banking Corporation, for deficiency in the documentary stamp tax and gross receipts tax for taxable year 2001. Petitioner received the pre-assessment notice on May 18, 2004, and filed a protest against it on May 27, 2004. In response thereto, the BIR on July 16, 2004 issued a formal letter of demand with assessment notices, which partly reads, "It is requested that the above deficiency tax be paid immediately upon receipt hereof, inclusive of penalties incident to delinquency. This is our final decision based on investigation. If you disagree, you may appeal the final decision within 13 days from receipt hereof. Otherwise, said deficiency tax assessment shall become final, executory, and demandable." So instead of protesting the FLD or fine, or the formal letter of demand or final assessment notices, the petitioner filed a petition for review with the CTA division, which was being dismissed on the ground that the petitioner failed to file administrative protest on the formal letter of demand or final assessment notice, in which the assessments did not become disputed assessments as subject to the court's review. Then, the motion to dismiss is granted and the petition for review is hereby dismissed for lack of jurisdiction, as well as the motion for reconsideration. Following the denial of the motion for reconsideration with the CTA division, the petitioner did not stop there, in which he still appealed the dismissal to the CTA en banc, which also denied the petition for review as well as the motion for reconsideration. The CTA en banc declared that it is absolutely necessary for the taxpayer to file administrative protest in order for the CTA to acquire jurisdiction, and although there are exceptions to the doctrine of exhaustion of administrative remedies, the instant case does not fall in any of the exceptions, in which it means that the case of Allied Banking Corporation does not fall on the CTA's jurisdiction. So in this case, the proper recourse of petitioner was to dispute the assessments by filing administrative protest to the Commissioner of Internal Revenue within 30 days from the receipt of the formal letter of demand or final assessment notice. So let's proceed to the issue which will be discussed by Ms. Pasaje.
So the issue in this case is whether or not petitioner violated the rule on exhaustion of administrative remedies. So the ruling is the petition is found meritorious. The word decisions in the provision of Republic Act 9282 has been interpreted to mean the decisions of the CIR on the protest of the taxpayer against the assessments. In the instant case, the petitioner timely filed a protest after receiving the PAN. In response thereto, the BIR issued a formal letter of demand with assessment notices. Pursuant to Section 228 of the NIRC, the proper recourse of petitioner was to dispute the assessments by filing an administrative protest within 30 days from the receipt thereof. Petitioner, however, did not protest the final assessment notices. Instead, it filed a petition for review with the CTA. Thus, if we strictly apply the rules, the dismissal of the petition for review by the CTA was proper. And it appears from the foregoing demand letter that the CIR has already made a final decision on the matter, and that the remedy of the petitioner is to appeal the final decision within 30 days. In this case, records show that the petitioner disputed the PAN but not the formal letter of demand with assessment notices. Nevertheless, we cannot blame petitioner for not filing a protest against the formal letter of demand with assessment notices, since the language used and the tenor of demand letter indicate that it is the final decision of the respondent on the matter. Viewed in the light of the foregoing, respondent is now stooped from claiming that he did not intend the formal letter of demand with assessment notices to be a final decision. Moreover, we cannot ignore the fact that in the formal letter of demand with assessment notices, respondent used the word appeal instead of protest, reinvestigation, or reconsideration. Although there was no direct reference for petitioner to bring the matter directly to the CTA, it cannot be denied that the word appeal under the prevailing tax laws refers to the filing of a petition for review with the CTA. As aptly pointed out by petitioner, under Section 228 of the NIRC, the terms protest, investigation, and reconsideration refer to the administrative remedies a taxpayer may take before the CIR, while the term appeal refers to the remedy available to the taxpayer before the CTA. As we see it then, petitioner in the appealing of formal letter of demand with assessment notices to the CTA merely took the cue from respondent. Besides, any doubt in the interpretation or use of the word appeal in the formal letter of demand with assessment notices should be resolved in favor of petitioner and not respondent who caused the confusion. What we are saying in this particular case is that the formal letter of demand with assessment notices, which was not administratively protested by the petitioner, can be considered a final decision of the CIR appealable to the CTA because the words used, specifically the words final decision and appeal, taken together, led petitioner to believe that the formal letter of demand with assessment notices was in fact the final decision of the CIR on the letter protest it filed, and that the available remedy was to appeal the same to the CTA.
Good day. So now let's proceed and tackle the next tax remedy of the taxpayer, which is the recovery of erroneously paid taxes. So this is the tax remedy of the taxpayer if the tax has already paid. Further procedures for the recovery of erroneously paid taxes, we have first, the taxpayer should file a claim for refund or credit within 2 years from the date of payment of the tax. So this is according to Section 229 of the National Internal Revenue Code. The 2 years in here is the prescriptive period. Take note that the counting of the 2-year prescriptive period differs from what tax is paid. So we have here first, the 2-year period is counted from the date of filing of the final adjusted return and not from the date of the quarterly income tax payments. Second, the 2-year period is counted from the date of filing of the quarterly VAT return and not from the monthly payments for VAT payments. Third, the 2-year period is counted from the last installment if the tax is paid in installment. Lastly, and the fourth one, for withholding taxes, which includes the final withholding tax and creditable withholding tax. For final withholding tax, the 2-year period is counted from the 25th day after the close of each calendar quarter. For the creditable withholding tax, on the other hand, the 2-year period is counted from the last day of the month following the close of the quarter during which withholding was made. The second procedure is when the claim for refund or credit is denied by an authorized representative of the CIR. The taxpayer may file a petition for reconsideration within 30 days. So remember, within 30 days from receipt of the denial and within the 2-year prescriptive period from the date of payment of the tax. Now let's proceed to the next procedure that will be discussed by my groupmate.
Good day. To continue for the procedure of the recovery of erroneously paid taxes, if the BIR did not act on the claim for refund or credit, the taxpayer must file a petition for review before the CTA before the expiration of the 2-year prescriptive period. An adverse decision of the CTA may be appealed in the same division within 15 days. And again, an adverse decision of the concerned CTA division may be appealed to the CTA in bank within 15 days. Next, an adverse decision of the CTA shall be appealed within 15 days to the Supreme Court. If you've noticed, we mentioned two CTA, which is the CTA and the CTA in bank. The difference between both is that CTA is composed of 15 justices with 5 divisions. Each division is composed of 3 justices. If a petition for review is filed before CTA, a division consisting 3 justices is assigned to review the petition. And if denied by the CTA division, the next remedy would be the CTA in bank. In CTA in bank, not only 3 justices will decide from the petition, but all 15 justices will decide. Appeal to CTA in bank is made within 15 days from the receipt of the division of the CTA denial decision. If again denied by the CTA in bank, the final remedy would be appealing to the Supreme Court, where appeal should be made within 15 days after receiving the receipt from the CTA in bank denial. If again petition is denied in the division of the CTA, next step is to proceed to CTA in bank. If denied by the CTA in bank, the next or the final remedy would be appeal to the Supreme Court. It must be noted that aside from complying with the rules on deadlines, all required taxpayer procedures for his administrative remedies must be executed within the 2-year prescriptive period, and in case of adverse decision, the taxpayer must have interposed a case for the recovery of the tax with the CTA on or before the expiration of such period. The failure to do so shall result in the forfeiture of the tax subject for the claim. So what happens if the 2-year period was about to lapse? If this happens, the taxpayer discovers that the erroneous payment when the 2-year prescriptive period is about to lapse, he may file a claim for refund or credit simultaneously with the institution of a case for the recovery of the same before the CTA. To have a better grasp with the procedure, we have here the flowchart summary of the recovery of erroneously paid taxes, where the procedure will start in claiming the refund by filing the administrative claim within 2 years from the date of payment. And in case that the claim is denied by an authorized person of the CIR, the taxpayer may file a petition for reconsideration within 30 days from the receipt of the denial and still within the 2-year prescriptive period from the date of payment of the tax. Hence, the representation for this arrow below. And next, an adverse final decision of the CIR shall be appealed by filing a petition for review before the CTA within 30 days from the receipt of the final decision and within the 2-year prescriptive period. And if the BIR did not act on the claim for refund or credit, the taxpayer must file a petition for review before the CTA before the expiration of the 2-year prescriptive period. And if the petition is denied in the division of the CTA, the next step is to proceed to the CTA in bank and appeal within 15 days from the receipt of the division of the CTA denial decision. And if denied again in the CTA in bank, the next step is to appeal to the Supreme Court, and the appeal should be done within 15 days after receiving the receipt from the CTA in bank denial.
The case that we see fit or that relates to our topic, which is the recovery of erroneously paid taxes, is the General Register number 231581. This was promulgated last April 10, 2019. This case is between the Commissioner of Internal Revenue and the Univision Motor Philippines, or formerly Nissan Motor Philippines Incorporated. So what happened in this case? Okay, on July 8, 2011, Respondent Univision Motor Philippines Incorporated filed its amended annual income tax return for 2010 and an overpayment of income taxes. Univision opted to claim its overpayment of income tax through a tax credit certificate. On March 12, 2012, Univision filed its administrative claim with the BIR explaining that the overpayment of 26,103,898.52 pesos consists of prior year's excess credits in the amount of 15,576,837 pesos, last minimum corporate income tax amounting to 2,341,683.48 pesos, and creditable withholding taxes accumulated during the 4 quarters of 2010 in the amount of 12,868,745 pesos. Univision filed its application for tax credit. The BIR failed to act upon Univision's administrative claim. As such, Univision filed a petition for review with the CTA on April 12, 2013. On March 10, 2015, the Court of Tax Appeals, or the CTA, First Division partially granted Univision's petition for review and ordered Petitioner Commissioner of Internal Revenue, or the CIR, to issue a tax credit certificate representing Univision's unutilized or excess creditable withholding taxes for taxable year ending December 21, 2010. The CIR filed a motion for reconsideration, but it was denied. The CIR elevated the case to the CTA en banc, and the latter affirmed the decision of the CTA First Division. The CIR moved to reconsider, but still it was denied. Hence, this petition for review on certiorari before the Supreme Court was filed by the CIR. Now let's move on to the issues and rulings of this case that will be discussed by my groupmate, Ms. Ainah Capuyan.
Now we are to determine the issues of the case between the Commissioner of Internal Revenue versus Univision Motor Philippines Incorporated, and we have here 2 issues of the case. First is, did Univision prematurely file its judicial claim for refund? No, because according to the procedure of recovery of erroneously paid taxes, the claiming for refund or credit must be executed within the 2-year prescriptive period. In the case, Univision filed its administrative claim with the BIR on March 2012. Since the BIR did not act on the claim for refund, which made Univision file a petition to review with the CTA. So in the flowchart, you can see here that in case that the BIR did not act on a claim for refund or credit, the taxpayer must file a petition for review before the CTA before the expiration of the 2-year prescriptive period, which Univision did. So in that case, Univision did not prematurely file its claim for refund because they filed the administrative claim and judicial claim with a 2-year prescriptive period. The 2-year period to claim for refund is reckoned from April 15, 2011, which is the date Univision filed its final adjustment return. Since Univision filed its administrative claim on March 12, 2012, which is the filing for the claim for refund or credit, and its judicial claim where the Univision petitioned for review with the CTA on April 12, 2013. So from March 12, 2012 and April 12, 2013, it is within the 2-year prescriptive period. Therefore, both of the respondents' administrative and judicial claim for refund were filed on time or within the 2-year prescriptive period provided by the law. Under the circumstances, if ever Univision waited for the CIR or the commissioner to act on its administrative claim before they resorted to filing a petition to the court, there could be a chance that the 2-year prescriptive period will lapse effectively, which can result to the loss of Univision's right to seek judicial recourse, and worse, its right to recover the taxes it erroneously paid to the government. Because it shall be noted that the failure to file the claim for refund or credit within the 2 year from the date of the payment of the tax shall result in the forfeiture of the tax subject for the claim. For the second issue, was Univision's failure to submit the required complete documents at the administrative level a ground for dismissal of the petition? No, because in this case, it was the inaction of CIR or Commissioner which pushed Univision to seek judicial recourse with the CTA. The Commission or the CIR did not send any written notice to respondent informing it that the documents submitted were incomplete or at least require respondent to submit additional documents. As a matter of fact, CIR did not even render a decision denying respondent's administrative claim on the ground that it had failed to submit all the required documents. Considering that the administrative claim was never acted upon, there was no decision for the CTA to review on appeal. However, this does not preclude the CTA from considering evidence that was not presented in an administrative claim with the BAR. And that would be all for our presentation for the tax remedies. Thank you for listening and have a good day.